What's going on, guys? It's GBP baby. Welcome to another video. It's currently 11:35 on Tuesday the 24th of October, and yeah, we're going to get straight into the charts. Hopefully everyone's watched yesterday's video and looked at today's delivery, which was beautiful. And I've also uploaded a trade execution video where there is quite some interesting analysis as the trade was executing, so to speak. So I do suggest everyone goes and looks at that. But yeah, we'll get straight into the charts. Here's the weekly. You can see we traded down, took out Monday, the week commencing 9th of October's low, and now we're trading back higher. So for Monday and Tuesday, we've already done quite a lot of the range of the week, which says a lot about what's to come for the rest of the week. But if we go to the daily, you can see we have this massive green up close candle, and you can see we're starting to push into the highs here, and here. So tomorrow, preferably, I'd like to see a continuation. The fact that we haven't taken out this swing high yet, and that's so the fact we haven't taken out Monday's high, I want to see that get taken before I see any type of retracement, because as soon as that buy side gets taken, it will make Monday's candle a bullish order block, which then we can use to help us push into relative equal highs here, and again potentially reach up into this high up here. So right now I'm just waiting for it to see if we can reach up into that. We also have this inversion fair value gap that we need to take note of, so I'll just draw that out now, and I'm also going to mark out the 50% level of that. Now the reason I've marked out the 50% level is because if it's an inversion fair value gap, depending on what side of it we're on, it should provide support. So you can see we traded through on the downside, and then today we came down after taking out these relative equal lows, traded aggressively higher, and now we're back above that 50% level. So now if we are to have any kind of retracement back into this range, I'd want to see us respect that 50% level and then continue to push higher. Let's go down to the 4 hour. So you can see that we took out these swing highs here. We haven't quite taken out this buy side liquidity yet up there, but one thing I think we might want to take note of, if we drop down to the lower time frame, we should look for PD arrays. We need to look for PD arrays around this 50% level of that daily inversion fair value gap that price may want to draw down to before moving higher the next day. So we have a swing low here. We don't have a direct fair value gap here, and when I say direct fair value gap, I mean there's not an obvious fair value gap, but there is this long wick. And now we might want to take that into consideration as a potential draw on liquidity, and that's because it's below this swing low and it is level with that 50% level. So let's go down to the 15 minutes, see if we can see anything. Yeah, there's the fair value gap. So that's another good example of how wicks work. Although I didn't see a fair value gap here on the hourly, and there's a swing low here, just because I know how wicks, just by understanding how wicks form and what they represent, I knew that there was going to be some kind of fair value gap residing there at the 50% level as well, which is perfect. And we can see that right there. So I'm going to draw that out. I'm going to make it orange. And how many hours have we got left? We'll see, we still have like a lot of hours left of the day, so I don't really want to say too much. But overall, I want to see if price can reach down into here and see if it finds support there. Another reason it's likely to find support here is because this is a bearish order block from this low to this high. That's a bearish order block. We've traded through it now on the upside, which means that this bearish order block should now be acting as a bullish order block. And we can also look at the 50% level of that, and you'll see that lines up perfectly with the same level being that fair value gap. So there's reason for price to find support there, is whether it does, which is the question. If it does find support, then I'd want to see us run up into this buy side liquidity where we now have relative equal highs created here at 11:30, and then obviously we have these highs residing up here as well, and then a potential push up into these relative equal highs as well. Let's go to the 4 hour, see if there's any fair value gaps up here. We have this inefficiency here that might want to get traded to. But right now, I just want to see how price acts. Now, considering how much movement we've had on Monday and Tuesday, with it literally moving lower and then literally closing in its range, Wednesday's probably going to be mostly consolidated. So I'm not really expecting too much movement tomorrow. but Thursday and Friday I'd want to see more. But overall, let's see if we can move back down to the 50% level off that inversion fair value gap, and then turn around and start running for the buy side liquidity. One thing to remember though is we have got, I keep saying this in every video and I'm probably going to keep saying it, there are a lot of things going on in the world right now which could easily rock the markets any direction at any time. So that's one thing that we can't predict, but we'll do as best as we can. Let's go to GBP. We'll start on the weekly. You see we traded up. Where did we trade to? 50% of this wick. Go and watch yesterday's video, guys. We traded right up to it, literally pretty much to the pip. The high of the day was 1.22889. Is that today? What day are we on? We're on Tuesday, aren't we? We're looking at Tuesday. So the high was 1.22889 and the mid was 22874. So that's only a few pipettes above the target. So now that that's in line with our expectations, what we're expecting, I want to see lower pound. That means I want to see this sell side liquidity get traded towards tomorrow. And pretty much just the same as what I just explained on dollar. This candle here, Monday's candle, should act as a bearish order block. As soon as we trade above this high, it will be acting as a bearish order block, meaning that 50% of the range should be respected. So we can draw out 50% of that range now, just because we're assuming that we're going to be using this as a bearish order block. And I'm also going to mark out these relative equal lows down here. Another thing to take note of is there's a fair value gap here that we've been trading in, and look how we've respected the 50% level of the fair value gap. Volume has respected it. You can see, yes, we've wicked through it twice, wicked through it here, and then wicked through right up to the open of this daily bullish order block, but the volumes remain below the 50% level, showing respect, and again a likelihood to push lower and run down into the sell stops and sell side liquidity. Let's drop to the 4 hour, see what we can find. Now we have this massive inversion 4 hour fair value gap residing here. Let's change the color though, make it red. So this actually will put a middle line there as well. This is probably the best feature that TradingView's ever given us. So let me just thicken it. So in terms of retracement, I want to see price trade back into this inversion fair value gap. Let me just call it inversion fair value gap so we know. IFVG. So price can trade back into the inversion fair value gap, but I want to see it respect the 50% level, of course. And then after that, we have relative equal lows residing below here. This sell side liquidity with a fair value gap here, and of course the sell side liquidity I just showed you on the daily down there. So there's a lot of sell side, but again, with how much price action we've seen on the Monday and Tuesday, I wouldn't be surprised if Wednesday was quite range bound. So we'll see, but yeah, I'd like to see us retrace back into this 4 hour fair value gap, find some kind of resistance, and then start to push lower and take out these relative equal lows below here. These are very clean lows, so price will definitely want to draw into that. And these two lows is here as well. Price will definitely want to draw down into that. But like I said, if we are to retrace, it'll simply pull back, run into the 4 hour gap, and then move lower. One thing to take note of, it's possible we might take out these relative lows first. Let me see. It's possible that price may take out this low first. Let me just show you with a path. So price may want to come down first and then retrace and then move lower. And the reason for that is because there's going to be sell stops residing below these lows here. These are significant swing lows, right? So if price comes down here first, as soon as lows are getting taken, what do we expect? We expect some kind of run on stops. So this move higher back into the inversion fair value gap would be that run on stops after these stops are taken. I'm going to say that again. So Price may want to move lower first to take out the sell stops from Monday's low before retracing into the inversion fair value gap. I think it's unlikely for price to want to just retrace straight away, purely because we haven't taken out any sell stops yet, and the sell stops are residing below that low. So we'll see if we can do that. But yeah, that's something to consider. And yeah, a beautiful price action. It was nice to see us hit that 50% level off the wick during the London session, 3 a.m. Then we had a nice reversal, broke lower and started pulling right down into these lows. Had the classic pullback during the 5 till 6 a.m. and then we ran lower during the New York session and have been falling since, and now we're back in that consolidation phase. So yeah, but overall I want to see this 50% level of the 4-hour inversion fair value gap get respected. Let's now look at Euro to finish. You can see Euro traded. Where did Euro trade to? Right to that 50% level off this weekly wick, just as anticipated. Beautiful to see. Took out buy side, residing above Monday 9th of October week, and then we came right back down. Jump to the daily, we can have a better look. Is this a 4-hour fair value gap? Right, so we traded into that 4-hour fair value gap. There were beautiful relative equal highs residing above there. You can see our price rushed right up into that, grab those stops, and look at how the bodies again. The bodies continue to respect the 50% level of that fair value gap, just about missing that weekly wick, and then falling aggressively towards the downside. So what am I expecting? Again, it's pretty much the same as what I just showed you on pound. With the inversion fair value gap, we can draw that out now. And if price is going to retrace, that's the highest I'd want to see it retrace. Now, one thing to note though, we have this fair value gap as well on Euro. And depending on how weak Euro is, it might not even make it above this fair value gap. So that is definitely one thing to consider. Let's quickly go to the daily first though. Yep, same thing. I want to see us start to push down into these lows. But like I said, I am thinking tomorrow is going to be quite a consolidated day, to be honest. Let's look at the 1 hour. So this was that first 4-hour fair value gap, and this was that second 4-hour fair value gap. I don't think it's likely we're necessarily going to reach up to that second one, which is why we'll probably find a lot of consolidation within that first 4-hour one here. So I want to see if we can pull up back into this range. So I'll get rid of that second one, but yeah, that's pretty much everything, to be honest. So overall, I want to see more downside. I wouldn't expect too much price action tomorrow. But yeah, these are quite ugly markets right now though, and that is purely because of last week's heavy consolidation as well. Last week's consolidation was disgusting, and now it only seems like this week and next week we're probably actually going to see some nice expansion out of that and start to see more aggressive movement. That's going to be everything, guys. Thank you for watching. Don't forget to like, comment and subscribe, and I'll catch you in the next one. Peace.